the buyers who win don't necessarily feel comfortable. Let me start with the uncomfortable. The buyers who win in housing almost never feel comfortable when they act. And if you've said recently, I just don't feel good about making a move right now, you're not alone. Here's what I keep hearing. Rates are too high. What if prices drop? After I buy. Insurance in Florida feels unstable. There's too much happening globally. It's an election year. The economy feels fragile. It just feels off. Those are rational concerns. But here's the distinction most people miss. Uncertainty is not the same thing as instability. And confusing those two can be expensive. By the end of this video, you'll know whether your hesitation is emotional or structural. Because those are not the same thing. Take a sip of water. My throat's not exactly back. Goodness. See, human beings are wired for certainty. We want predictability outcomes, clear direction, social validation, external confirmation. Markets don't provide certainty. They provide profitability and probability, and it feels uncomfortable. Your brain interprets volatility as danger. But volatility and collapse are not the same. Most people respond to emotional discomfort. Serious buyers respond to structural data. There's a difference. The market feels safest at the top. Think about 2021. Low rates, bidding wars, inspection waivers, over-asking offers. People felt validated. But that validation cost them leverage. Appraisal gaps, compressed due diligence, emotional overpayment. Now rewind to April 2020. Lockdowns, uncertainty, fear. Nobody felt comfortable. But buyers mid-2020 locked in 3% debt. They didn't feel calm. They felt calculated. Calculated beats comfortable. Pretty much every cycle. If this way of thinking feels different than what you usually hear, make sure you're subscribed, because this channel is built around structural analysis, not headlines. And we build these frameworks layer by layer. Excuse me. Throat. Goodness. When everyone agrees it's safe, leverage disappears. In Palm Beach County in 2021, 15 offers per property, inspection waivers, that normalized. Sellers dictated terms. That was comfort. That was expensive comfort. Now, in selective segments, days on market extended, inspection leverage returning, concessions appearing. That feels uncomfortable. But discomfort often signals filtration. And filtration creates positioning windows. Markets will stratify. They don't freeze. Yeah, sorry, my throat. South Florida is not one market. Luxury coastal primal behaves differently than insurance sensitive mid-tier. Older condos under reserve scrutiny, they behave differently than newer inland construction. Luxury prime is balance sheet driven. Mid-tier is rate sensitive. Older condos are reserve sensitive. Discomfort is uneven. Opportunity is uneven. If you're in Palm Beach Gardens or Boca, you've seen this divergence already. That's segmentation. And segmentation rewards study. By the way, it's cold here again. Yeah. Nationally, we've seen boom cycles in Austin and Boise, Idaho. Then repricing. Midwest metros steadier. Carolinas still absorbing migration. Globally, higher for longer rate narratives. Debt conservations, currency shifts, capital reallocating toward tax-sufficient states. That creates psychological noise. But capital is still moving. Selective, measured, prepared. Discomfort filters reckless capital. Does not stop disciplined capital. Excuse me. I want to stick with this, so yeah. But when someone says, I don't feel comfortable, it usually means one of four things. They haven't modeled the numbers. They're reacting to headlines. They want social validation. They're afraid of regret. Regret is emotional. Leverage is structural. And if you model long hold periods of insurance, it increases. Liquidity buffers, conservative appreciation, and the math works. Your discomfort may not be structural. It may be psychological. If you've been thinking about this decision quietly, drop a comment that just says, prepared. I read them, and I pay attention to what serious viewers are wrestling with. Oh. Oh my goodness. Here's the uncomfortable question. If you're waiting to feel comfortable, what exactly are you waiting for? Lower rates? If rates drop, demand increases. Negotiation decreases. More stability in the news? There will always be another election, another geopolitical event, another economic headline. Markets do not pause for emotional clarity. They adjust structurally. If you need consensus before you act, you are not choosing emotional validation over structural advantage. And emotional validation is expensive. Now, this is not reckless advice. If your liquidity is weak, if your hold period is short, if your numbers don't work, waiting may be strategic. But if your hesitation is headline driven, you may be confusing noise for risk. Noise is a distraction. Excuse me. Winning buyers, they did not say, I feel good. They say, my numbers work. They stress test payments, secure underwriting early, understand insurance, study corridors before shopping. Preparation replaces comfort. Preparation creates calm. Calm is clarity. If this framework resonates, this week I'm breaking down what preparation actually looks like in 2026, where leverage is quietly forming, Which Florida segments are structurally durable? How national shifts filter into local corridors? This channel isn't about hype. It's about positioning. And positioning compounds. The buyers who win, they don't wait to feel comfortable. Believe me. They wait to feel prepared. If this is perceptive and clarity, please like the video so it reaches other serious viewers who are navigating the same uncertainty as you. Subscribe if you want disciplined housing analysis, not emotional noise. And if you're in South Florida or relocating strategically, my contact information is below. I take a limited number of serious conversations at a time. Clarity compounds. Have a good evening.